Where is the opportunity in the stock market? Is it in value stocks or is it in growth stocks? What value stocks? What growth stocks? We're going to be talking about that in today's daily stock market brief show. If you're new here, welcome to the channel. Make sure to smash that like button and subscribe. I do these shows Monday through Friday, 5 days a week, but that may be changing here very shortly. Stay tuned. Today's date is June 24th. We got a lot to talk about today. We're going to be diving into the indices, looking at some bullish concepts and some concerning concepts as well that are on my mind. Let's just get into today's episode. All right, everybody, welcome back. I want to show you the relative chart between the Russell 1000 growth. So this is really just a ratio between growth and value. Now, this is a chart that I've been looking at for quite some time, and it helps to really kind of see where's strength. Is it in growth or is it in value? However, yesterday, I got to see a Tony Dwyer talk about applying a rate of change on this ratio. And when he did it, I was like, wow, it was actually very impressive. And if you're part of my Discord community, you're gonna be like, wow, that's actually pretty cool, because you'll notice some of the stocks that we have on that I've been alerting or picking are not necessarily based off the rate of change, but you can see why that I've been mostly in various value plays. Now, first off, this right here, we're looking at the IWF over the IWD, which is Russell 1000 growth versus Russell 1000 value. So when this goes up, that means that growth stocks are outperforming the value stocks. Now, when we applied the rate of change that I learned from Tony Dwyer, what you can see here is when the rate of change spikes over this level of 5 right here, this is typically an overextended area for growth, and it's time to start looking into value. Now, this is just on a relative basis. So a relative basis doesn't necessarily mean that both are going to go up. It just means that, hey, there's a strong possibility here that value can outperform growth on a relative basis. It's always important to look at the absolute basis as well, which means pull up the specific chart. When it gets to -5, that is the area where, hey, it's extended, value is overextended. It might be time to start looking into growth stocks. So let's dive into the IWF and IWD. IWF, wow, this looks like what? This looks like the Qs, right? The growth stocks, and we'll get into what makes up this specific ETF here. But you can see it's a very strong move overall, starting really since May 17th to May 24th. And if we pull back up this, guess what? May 17th to May 24th, right in that area, what do you know? It's signaled to go towards the growth aspect of things. So this has been pretty reliable so far, but it is getting very toppy. Not necessarily toppy. It's in very bullish context. Okay, so keep that in mind. A little bit of a shooting star candle. Let's take a look at the IWD. The IWD looks like what? Well, it looks like the Dow Jones Industrials, right? You can see how it kind of slowly arced and then puked out here, almost down to the 100-day moving average, and we're trying to recover here slowly. All right, so from an absolute basis, we're still in very bullish context, and if you are a trend trader, you want to play the trend and you buy pullback. So that would be specifically a pullback. Nothing technically, structurally has been damaged here. It just has a little bit more to recover. Price percent oscillator here looks like it's trying to curl itself back over 2 and get back above 0, which would be very bullish for value stocks. But what are the individual stocks within these? Well, first off, let's take a look at growth. What do you know here? Growth, Apple, it's one of the top holdings in this fund. Then you got Microsoft, Amazon, Facebook, Google, Tesla, Nvidia, PayPal, right? So you got these, FANG stocks. You have just these big growth names here, mega cap. So it's interesting to put this together, seeing this right here, getting to the warning sign saying, okay, it might be the time to go to value, as the absolute picture has been getting a little bit overextended, and you're seeing names like this. Now, what's very, very important to point out here too, which is quite interesting, is if you take a look at Apple being the top holding, it looks like it's breaking out of the symmetrical pattern. So that's actually a pretty good thing. So if this is the top holding and this continues ramping up higher, actually from an absolute basis, this looks pretty good. However, if this is a a false breakout, okay, well, maybe it's going to take some more time to consolidate. You might be wondering what these two circles are here. Okay, so this is also important because we notice here Nvidia is one of their top holdings too as well. Okay, so if you look here, because Nvidia has just been on a monster tear, and if you haven't noticed that by now, I would be shocked, and we'll go into that. But you can see here, Apple, now recently Nvidia just announced they're going to be splitting, right? I forget when exactly. I have it on my chart, but you can see here, this first circle is when Apple announced that they're going to be doing a split. And you get just this huge euphoric rush. Boom, 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 all the way up to this peak. And what do you know? That peak is just the day before, day after, when the Apple stock actually split. Now, keep in mind, just because it's split, that it doesn't go down because it's split. All right, so you're like, if you're thinking like, well, no, it went down because of the split. It cut it in half or four or whatever. Whatever. I think it was a 4-to-1 split. I can't remember. No, the stock fell a large percentage point after the fact. So you got this monster ramp up, and then you saw that euphoria fizzle out quite quickly. Why is that important? Well, look at Nvidia. Look at this monster move from when they announced it, that blue circle, all right, the May 18th-ish range right here. This is when they announced it, and you see from around 540, and it's trading around 780, a high today of 776. That's insane. That's a monster move, and it hasn't digested any of those gains so far. So when is that split going to take place? It's going to take place on the 19th. Does this mean it's going to crash down like Apple did? No, but just be mindful that it did happen already in one of their top holdings. We're looking at this being shifted over to potentially value here soon. And, just put 2 and 2 together here, right? So 19th, this blue vertical line right here is when they split. Maybe it digests gains before, and then we ramp up even higher. It's hard to say, but just be very aware that if you're buying up here, like, that's crazy because you might get stuck for a while. It might have to consolidate. All right, it could go higher, but just look at the price percent oscillator. It's kind of curling itself over. You get a big uptick in volume here, boom, boom, boom. But now as it's kind of drifting higher, the volume is kind of tapering down slightly here, which means that momentum could be changing. It could be the conviction of this move might be slowing down. Okay, let's look at value. Now, this is funny to anybody that is part of the Patreon group or the Discord. Look at the names in there. Well, JPM, that should sound familiar. Disney, that should sound familiar. XOM, that should sound familiar. Pfizer, we traded that. I did post a trade ideas CVX2 as well. Not recently. These I posted a little while ago. But let's take a look at a couple of those names from an absolute basis. Now, just keep in mind, I'm in a Disney position right now. And we're starting to see strength these last 3 or 4 days so far. I'm in a small position, but this was already alerted a while ago. So, I feel like it's okay to just let everyone know that I'm in this, whatever. This downtrending line, and Disney saw some strength today. Is this going to continue? Maybe, but I mean, this could be just this strong move there. It's consolidating those gains, and now we might continue another up leg. The price percent oscillator looks pretty good here. It's still below 0, so things can change. The RSI is finally getting back above 50, so this could be the start of a bullish move here. All right, look at J&J. This is another one. Like, okay, so this is overall a stock that has been trending to the upside. Now we have this falling wedge here. The price percent oscillator looks like it's starting to curl itself back up. We're floating right around the 100-day moving average. This kind of stuff looks like pretty good setups. Another thing also to mention was the JPM. As far as the financials go, this I posted on Twitter June 18th. We saw a big pullback in financials recently after that FOMC meeting. We saw this big red candle pulling down to the monthly 5 EMA and the previous areas of resistance. So it was this big confluence of support. So I posted that out. I wanted to make sure everyone saw that because this sets up itself for good opportunities. All right, and if you looked at JPM here, it was pulling pretty significantly down to here. And, this is one of the alerts that I posted on our Discord. I'm pretty much out of the position as of now. I have a little bit left. But, this was options it was a 716 strike at 160 for 87 cents. And this was just based off of looking at the overextensions and looking for areas of value in a an uptrend sector, and which would be financials. Financials have been doing very well. So just interesting perspective. So this is why I'm trying to kind of not necessarily tell you that value is going to be the outperformer here, but there's a lot of things pointing to the favor moving into value versus being into growth at this particular point in time. And that obviously can change, right? S&P 500, let's look at that. All-time highs for the S&P 500. Price percent oscillator looks like it wants to cross over. Hey, good stuff. You have the 5-day moving average sloping up. It's above the 20, above the 50, above the 100, above the 200. We'll get into some risk factors here shortly. Check this out. Also, from a positive perspective, this is still oversold. Crazy, as the market is at all-time highs. So something's weird here. It's very hard to determine this. But it is oversold, which says to me, hey, we still have the opportunity to potentially run higher. And July is right around the corner. Keep in mind we have the quarter end, and rebalancing could get weird, but it could also mean while they rebalance, potentially you see more of a continued melt up. Now, from a bullish perspective, so this is a divergence. So percent of stocks above the 50 and the 200 on the S&P 500, right? So the internals have been deteriorating as the market presses higher, and that's not good. That could signal some sort of top or potential area for a pullback. But from another note, we saw this pretty significantly steep drop, and now we're starting to see it uptick a little bit here on the percent of stocks above the 50-day. So what does that mean? Well, if we have a big pump right here where the percent of stocks start getting higher, because 47 is a relatively low reading, it can get a lot lower, but typically it'll spike down and then spike back up. And same thing, if it gets too high, it can spike up and then pull back. So if we get all of a sudden more market breadth to come into the market, this could very well set up a lot of strength for those value names, which I've been kind of alluding to, or other ones too as well. But this could help the broader market really ramp up to this July rally from a seasonality perspective. But it hasn't done so as of right now. This is, slow move up. There are a lot of internals. I did see a tweet recently that showed charts of how many sectors, what was it? It was basically saying it showed the 11 sectors in the S&P 500, and it said more than half of them are basically under their 20-period moving average. Not the sectors, but the percent of stocks within those sectors. I'd have to pull it up. I'd have to pull it up. I can't remember, but it was basically telling me that, hey, in short, there's a lot of internal weakness as the market's pressing higher. So it's something to just pay attention to. As far as a VIX perspective, we did break out of the symmetrical triangle. The only thing that I want to note here is we tagged this lower trend line. Those can act as support. Coming into Friday, right? We might get that VIX crush Friday. We'll see. And then the Bollinger Bands, they are contracting once again. When we get these very tight contractions, it can lead to spikes in volatility, as you've seen here, as this moves down this blue line, right? We hit these low readings, and you can see if you just look up at the Bollinger Bands, they contract tighter at when this reading goes lower, right? This is the Bollinger Band width reading, so you can just visually see the line, or you can just look at the Bollinger Bands here, and it's starting to contract tightly once again. If you look at the 30-minute time frame, today we hit a very low point, I believe from the daily perspective. Yeah, it hit a low since we haven't seen really since February, so very, very low reading. It filled one of the gaps right below us today, and now the risk factor is the 4 open gaps that are potentially above us. So just be mindful of that. Perhaps we base out a little bit more, or we get some sort of sudden spike and come fill 18. We don't know yet, but it's just something to be mindful of as we're sitting around this 15 area, this level of support. What has the S&P 500 been doing from an absolute perspective? Let's look at the 15-minute time frame. Just look at this. It just gap ramps and then hang out, right? We talked about that in the Discord if you're on there. If not, no big deal. But you can just see here, sideways chop, next day, ramps up, sideways chop, next day, sideways chop, and then look at today, how just basically just there's there's no price direction. There's no nothing. It's just overnight sessions gapless up higher, and then it chops sideways. So just interesting price action overall, and there's a slight divergence there. However, we have the 5-day moving average starting to incline more here, which is a good sign for the bulls. You want to see that continue. The more we stay up here and then we lose data behind us, this will continue to drift up higher. Now, this is the trend. This helps me look at breadth, arms index. I posted this on Twitter the other day. This looked like it was about to cross through the red, which ends up being, it creates a little bit more of a rocky environment for the S&P 500. This is something that I learned from Tim Ord. And as you could see here, you know, across it, we saw some rockiness to falling. Same here, you know, up a little bit, then down. Oh, you can just see it on the chart. Typically, you get some rocky behavior, but it curled back up. So I'll continue to watch this, and I'll let you guys know if that crosses over. As far as the divergent perspective, looking at this chart as well, something also I learned from Tim Ord. S&P 500 make that all-time high. However, the ratio between S&P 500 and the TLT is still a negative divergence, and we called this one out previously, right before this little panic sell-off, this 3% panic sell-off, and that immediately got bid right back up. But it is still diverging at this current moment. Can it resolve itself? Absolutely can resolve itself, so we'll continue to monitor it. NASDAQ, daily time frame, a little bit of a shooting star candle, right? This looks just like that growth chart I showed you earlier. RSI is moving into that overbought territory. Overbought can stay overbought for a long time. Another way to think of overbought means that there's just a lot of strength, all right? But if it does get overextended, far from these moving averages, sometimes you might want to see a reconnect, digest those gains, and then continue its upward trend. So just be careful going long at these high levels. These type of patterns, these rising wedges, or yeah, no, I'll just call it a rising wedge. I was going to call it something else, but they can get overthrows, and when they get overthrows, they might come back to back test it, or they might come reverse themselves and come lower, and then we would have to just, you know, see what takes place from that point. From a 15-minute perspective, you can see the 5-day moving average is nicely just trending up, nice and smooth from bottom left to top right here. It got overextended today on a negative divergence and it started heading lower. I didn't draw this out, but you could potentially draw this as a little wedge. You can draw it, you know, from a trend line going down this way. Here, we'll see where the future markets takes us. For all we know, we can gap us up even higher. I would be careful if it gaps us up higher, looking at the daily time frame. You know, it's been just gapping and kind of just camping out, but just be careful because you might get selling pressure shortly thereafter on a gap up. What I've been doing personally is I've been raising my stop losses up, and I've been taking a little bit of profits off the table on various stocks that have been getting a little bit overextended. Now, the percent of stocks above the 50-day and the 200 for the NASDAQ, look at this. So this move did shoot up nicely. So it, you know, we had the internals move, which is good, but there's still a divergence taking place when we get these sudden spikes like we did here and here. And we're getting one right now on the 200 too as well. Sometimes they revert. So we'll continue to monitor and see what this does. But as you can tell, the NASDAQ 100 is moving higher, and this is currently a divergence that has been building for a little bit of time here. If you look at the new highs index, also, we're at an all-time high, right? We reached an all-time high for the NASDAQ 100, but look at just the new highs. It's just such a low reading, 175. The last time we reached that, we were up here at around 250, and the time prior to that, we were north of 600. So just interesting divergence there. New high, new low, same exact thing, right? Divergence. As we reach that all-time high, this reading is weak, 150. As we reach this high, it was right at around 200 to 250, and then this high we had, you know, we're floating around that 600 marker too as well. So new highs and new high, new low. Interesting divergences. Dow Jones looks just like the value. You can see how we had that roller coaster move down, and now we're starting to kind of trying to rally ourselves back up, recapture the 50, recapture the 20, price percent oscillators crossing over. So there does seem like some opportunity in here, especially if we get that seasonality script or that rally into July. Just be mindful. Like I said, you just got to be mindful coming into quarter end because it can get funky. The DIA on the 15-minute time frames, this is just the Dow Jones Industrial ETF. 5-day moving average has been declining. It is starting to turn itself back up. That is a good sign for the bulls. Small divergence there. So you want to see it kind of pull back and then just bounce around in these areas. It looks like it does have resistance right around 342.50 to 343. So that's an area to just be mindful of. The transports for the last couple of trading days here have been just trending sideways. That's not a bad thing because they have been getting completely obliterated. If you do follow me on Twitter or if you've been watching these market briefs, you would know that on the quarterly time frame I showed it and the monthly time frame I showed it that it was reconnecting on the monthly time frame to its monthly 5 EMA, and those can act as pivot areas. It was right down in this range. Guess what? It acted as the pivot. We moved up, but it's not really like forceful move right now. So this could be potentially an ascending triangle. You know, we have a low, a higher low, a higher low. 15,000 looks like an area of resistance. So if we start recapturing that, it's going to help move this 5-day moving average and start inclining again, and potentially here for the short term start moving back into the bullish direction. Let's look at the Russell 2000. I'm going to try to go a little bit quicker now because we are running a little bit low on time. Price percent oscillator looks like it wants to cross over. It is trying to reach for that all-time high. Recapture the 20-day. This has just been a sideways chop for quite some time right here, so we'll continue to monitor this. You can see that the S&P, or not the S&P, the IWM, with the Russell 2000, right, was the strongest performing indice, I believe, compared to the Dow Jones, S&P 500, and the NASDAQ, and that's really because financials did very, very well today as a sector, and when financials do good, Russell can do very well too as well. The IWM, 20% of its holdings are in financials. Let's look at the 15-minute time frame. Little negative divergence. This could be a rising wedge. Gotta look. This is a pretty overextended move. Okay, so I wouldn't flip out if it breaks down completely, right? If it breaks down, that'd be actually not a bad thing in my opinion. That would be a good thing. You can see the 5-day moving average is kind of spaghetti right here. It's starting to incline. If you want to take a little bit of a breather and then, you know, move around a little bit more before it starts breaking out, that'd be a little bit better than just gapping and going, because then we get very, very overextended. So look for time to digest these gains a little bit here. And then also the BKX, you can see here, has been in this steady decline. Now we're starting to see some strength. It's in this little up channel, potential rising wedge. 5-day moving average has been declining, but we're starting to get this uptick. So as the days progress, you know, we'll lose more of that data, and then potentially it'll start obviously turning back up as long as we can stay above there. And that would be also good for financials to continue its trend as well. That's all I got for you guys on today's episode. One thing that I didn't say this specific episode, along with various commodities, I wanted to just show the dollar chart. This is a very important one to point out. The dollar has had this very strong correlation, negative correlation to the S&P 500. All right, so when this broke down, the S&P 500 moved up. When this goes up, the S&P 500 can move down. And you know, this big move right here, I would think that it would shake up the markets a little bit more, but we did not get that much of a shake up. Maybe that's to come. I don't know. But I wanted to just call out that this is flagging at the current moment, and that can be a potential risk factor if the dollar wants to continue this move up higher. It is positive on the year, just like the S&P 500 is. If we start breaking out of this and seeing some force, that can put pressure on the equity markets, because this could be very well a risk-off type of move. You know, people flood to the dollar in times of, I guess, not necessarily uncertainty, but I guess fear. You know, it's a fear trade. You'd see big spikes into this, as we've seen previously in flash crash or the pandemic. You saw big rises in the dollar, and then it continues its overall downtrend. So just be mindful. Bull flag right here. If we start breaking out, could put pressure on the equity markets. That's all I got for you on today's episode, everybody. Have a wonderful